So go to accounting chapter 4, depreciation of assets. Why do we have depreciation? We have depreciation because we purchased an asset, like equipment, building, machine, and so on. In as much as we purchase these assets, over time their value will drop, and the drop in that value brings about depreciation. So you have to work on it. It is seen as an expenses for the business, because those assets that you bought, those capital that you bought over time will not be the same because of usage. So over time, their value will start dropping. And as soon as their value starts dropping, it becomes an expenses for the business. Do you get what I'm saying here? As soon as the value starts dropping, it becomes an expenses for the business. And at the end of it all, you might have to even purchase a new one to replace it.
Like the iPhone?
Yeah, like the iPhone, like the equipment. After 5-7 years that you'll be using it, you have to replace it. So there's going to be replacement. But before you can understand when to replace it, you need to work out the scrap value and the value that it will drop and the useful lifespan. So that's why we have what depreciation is. So what is depreciation? I wrote. It implies to the operational expenses of a business that relates to the assets over their economic life. You have your operating profits. You get your operating profit from your operating activities. So part of items you take away from your operating activities is the depreciation. So depreciation is considered as an expenses. So it is on the debit side of your account. Do you understand? Income is on the credit side, depreciation is on the debit side, because depreciation is an expenses for the business. Do we get it? Okay. So a business must charge depreciation. If not, what happens? Your profit will be overstated. Without depreciation, you would think your operating profit is what? Is higher. You've forgotten that you have some assets that are being used and their value are dropping. So without depreciation, the profit of a business will be overstated, because you have left out certain expenses. Expenses should be taken away from your profit, yes or no? Now, just assume you did not take out the expenses. What happens to your profit? Your profit will increase. So you are overstating your profit because you ignored certain expenses. Does it make sense? You get it? If the second one, the balance sheet will not show the true value of assets. Your balance sheet should show the fair and true value of your business.
Like it shows the expense.
The real value of your business.
Like the expense and
No, don't talk about expense when it comes to balance sheet. Balance sheet is about assets, liabilities, then the capital. This is what the balance sheet involves. Then when it comes to expenses, it's part of your statement of profit or loss. Expenses, income, they are part of your statement of profit or loss. So if you don't figure out the value of the depreciation of your asset, the asset you continue to use over time, it will just be as if the asset is the same over the years. This is my laptop. How it was last year is not the same way it is right now. It will start dropping in terms of my usage. So if I don't put the value of depreciation on it, I won't know the true value of what my asset is right now. So to know the true value of your asset, you have to understand the amount it drops from it each year that passes by. Because each year that passes by, it starts depreciating. How much does it depreciate? That is what you need to work out. So whatever the value it depreciates is an expenses for you. Because at the end of it all, you have to replace it. You have to replace it, you have to maintain it. It won't work the same way as it used to work. So without calculating depreciation, you won't have the true value of your assets. Does it make sense? So these are the two reasons why depreciation must be charged. One, it's without depreciation, our profit and loss account, our profit will be overstated. Two, without depreciation, we won't have the true value of our assets. Because we assume that the asset is still its historic cost. Historic cost is the cost we purchase that equipment. But just like iPhone 11 of 4 years ago is not the same value as of today. It's not going to be the same price. But without putting depreciation on it, you still think the price is still the same, the value is still the same, the work is still the same, the function is still the same, but it's not. In accounting, we need to find the true and fair value of equipment, of assets. And to do that, we need what? Depreciation. The only asset that does not depreciate is land. It will appreciate. So land doesn't have depreciation. Land is part of your asset. You calculate it, but there's no depreciation about land. But whatever is on land will depreciate. Do we get it? Any question up to now? Good. So what are the causes of depreciation? Number one, natural usage. Because we are using it, it is expected that the value drops. Do you get that? Natural usage. This implies to the wear and tear of an asset. You are using it. The value is expected to drop. Two, obsolescence. For obsolescence, it simply means it's outdated. It becomes outdated. It has to be replaced. Do you understand? This is the first reason for this is the first cause of depreciation. The second one is obsolescence, which simply means with usage, it will become outdated. Even without using it, you have latest. Why do we have latest? There's no more iPhone 8 now because it's obsolete. It's no more. It's outdated. Equipment, technology will be outdated. That's why we have advanced technology. It's depreciation. Do you understand the causes of depreciation? The second one. The third one, the end of useful life. As soon as you purchase an equipment, you would have the lifespan. Oh, this equipment, I want to use it for 5 years. After 5 years, its useful life for the business is done. You can now sell it. It doesn't mean it's not going to work for others, but for the business, it's over. So that means depreciation also.
So like it goes above 5 years, you're not able to sell it, or not
it's not going to function the same way it used to function. So that is also depreciation. That's another cause of depreciation. And the last one is passage of time. Passage of time is about using it or not using it. They will still lose their value. Just like lease agreement. When you take a lease, the building for lease for 5 years, after 5 years it's done. You have to renew it. It depreciates. So using it or without using it, the value will still drop. That is passage of time. Do we understand? So these are the causes of depreciation. Any question about it? The next thing is factors to consider when estimating the amount of depreciation to be charged. Depreciation is an estimate. It's not a real figure. It's an estimate. But we just have to come up with something. Common sense thing. So what are those things we put into consideration before estimating the percentage of depreciation? The first one, the cost of the assets. How expensive is the asset? The higher the cost of the asset, the higher the value or the estimate of depreciation. Do you understand what I'm saying here? Do you get it or not?
No.
So you don't get it. We need to charge depreciation, yes or no? Depreciation is about certain percentage, maybe 10%.
What's the meaning of depreciation?
Depreciation,
Yeah.
I told you, the loss in value of an asset. So the loss in value of an asset, how much has been lost from this asset? That is what depreciation is. So how do we charge it? To charge it, we need certain percentage. The value is 10,000. 10% of 10,000 will be charged on depreciation. So the first thing you put into consideration when charging depreciation is the cost of the asset. So the more expensive the asset is, or the higher the cost of the asset, the higher the estimate of depreciation. Do you understand the first factor here? The second one, estimated economic life. Oh, it's going to use 5 years. So that's what we charge depreciation of. There's another factor you have to put into consideration. How long is this equipment going to use with the company? The third one, scrap value or residual value. The guaranteed market value. At the end of the year, the value of the asset minus the residual value divided by the number of years give you the selling value of it. So how much are you going to be able to sell it after 5 years? You need to know if it's going to be a loss or a profit. And the last one, the method of depreciation. When we talk about method of depreciation, no, the second to the last one. When we talk about method of depreciation, what kind of calculation do we want to use? Because we have straight line method, reducing balance method. And the last one we have, they didn't talk about it here, is revaluation. Revaluation of assets. So those are the methods of depreciation. You have to understand it also. And the last one is the type of assets. Some assets get depreciated quicker than others. Just take an example of a car and building. Which one do you think will get quicker in terms of depreciating? Car. So a car will be quick in depreciation than a building. Do you understand? So the type of depreciation will also determine the amount of depreciation you charge. Any question? So in the next class, we're going to talk about the methods of depreciation, which is simply reducing balancing method. Reducing balance method, reducing balance method, and straight line method. Is it clear? Any question up to now?